In regards to inheritance outside of just money, how does the process look for an asset such as a home?
Sure. So this is really, I think, when you look at an estate, let's first of all recognize we're talking about income taxes, or are we talking about inheritance or estate taxes? And those are two different taxes. And that tax regime, if you want to call it that, will apply to the same dollar. In other words, if you have money in an IRA that is yet to be income taxed, that dollar is going to get income taxed, but it's part of the estate value that is subject to an inheritance or an estate tax. And so that's really why we want to try to avoid some of this double taxation when it comes to retirement accounts. Now, with a house or a after-tax investment, we'll call it a non-qualified investment account, you might have capital gains in there where you bought the house for 250 and it's now worth 675,000 or whatever it might be, or a million. And therefore you would think there's this embedded capital gain in the house. When you pass away, those kinds of assets get what's called a step up in basis. And if you get a step up in basis, then there isn't a capital gain to the person who is inheriting the house. So capital gains income tax are part of that income tax regime. And then there is the inheritance tax regime. So the house is still going to be, inheritance taxed. So when you talk about, what'd you call it? The social, is that what your grandma says? The social media? The social media. So what the social media is telling you is they're trying to tell you to get money out of your estate. They're trying to talk about avoiding that inheritance tax or that, estate tax. And that's really talking about, do you get money put into a trust? Do you start gifting assets away? And when you start doing that, you start to create other complications because you're still here and you're still using and living in that space perhaps. And so really what I'm trying to talk about from the context of living our lives and having this asset to spend and having that house to live in, we're really talking about how are we going to be income taxed? And then ultimately, to your point about inheritance tax, how is that going to affect, how will that be part of the picture too? And we don't want to have both of them, $1 being taxed by the same tax regime if we can avoid it. So when you talk about a retirement account, you can't get around paying the income tax. You're going to pay it. Your grandmom's going to pay it if she takes it out before she goes. You're going to pay it if she leaves it to you, but the income tax is going to get paid. The capital gains tax, that could be avoided. The Roth IRA conversion, that could be a tax-free investment left to you, but the income tax are still getting paid today. And that's really what we look at over the lifespan of how an asset is used, is what's the best way to pay the taxes when, and kind of going through the estate back to your social media. We can kind of dive into that a little bit too on how we manage the size of an estate and how we avoid some estate tax issues and really just some estate planning control issues, as I would call them. As you can see, things can get really complicated and it takes a conversation to find out what's best for your personal situation. We're happy to start a conversation with you. Find us at gootfinancial.com and go to contact us. And we're happy to set up a 30-minute call just to learn about your situation and start to answer some of your big questions.